Live TV. Welcome back. With me, I have Justin, who is the branch manager at Hancock Mortgage in Florence, just right off of the Mall Road. So we've been learning a lot about your credit, what to do, what not to do. And I know you've got a few more tips to go over. I wanted to ask you just a couple of questions and then what is the best way to repair your credit if you have a credit score what is a bad credit score anyway?
I would say the idealistic for the mortgage industry, that the credit score we would like to achieve is a 640 or greater. Okay. So I'm not going to say a 600 is a bad score, but as a rule of thumb, I would say a 640, 660 and greater is the better. Of course, the higher you have, the more opportunities you're able to. I know I think in the automobile world, most of your like Ford credit or the actual lower interest rates, you know, somewhere in that 680 to 700 mark as well. So, but from our industry, the mortgage 640 or greater is the ideal score. We do have scores down to 580 that can work with borrowers down to 580 credit score. But then again, it goes back to, you know, you're taking a little higher interest rate.
That's what I was going to ask.
Right. It's a little tougher loan to do because you have to overcome. It just creates a hurdle through the process having a lower. They're saying, well, why should we give this loan if you've got, you know, if they've got a lower credit score? So we just have a little bit more hurdles to hurdle, but it's not impossible. We do it quite a bit. But 640, I would say, if everybody can, going back to what I'd said earlier, know your credit and your credit score. If you know, just try to maintain mid 600s range or higher, that would be ideal.
And okay, so if they have that and they're having a higher interest rate, can they refinance later, like in 6 months, if they build their credit back up?
Very much so. Okay. And I would highly recommend that, actually, strictly for the purpose of just the savings alone. And in the exact question you just asked, I've got a friend of mine that just purchased a car. It was a $15,000 purchase price. But because of she had limited she was young, so she didn't have much credit. So they gave her a high interest rate. So I want to say it was around 19.9%, 20%, something like that. But if she'll wait, I actually told her to come December, January to come back and refinance it. And I was actually got the numbers here that someone that bought a $15,000 car on a 5-year term at a 20% interest rate, their payment would be around $397.40 a month. That exact same car with a lower interest rate, because they have a better credit score, is going to save them $108.10 per month just because they have a better credit score, which over the period of the loan is going to save them around $6,500. So basically you're paying $6,500 more for the exact same car your neighbor's driving because they've got a better credit score.
So what you were saying about McDonald's and increasing 50 cents raise, it would be better to educate people on how to pay their bills on time and keep their credit score up, because they're going to actually keep more money in their pocket. Right.
Well, $250,000 over a lifetime is a lot of money. $6,500 over 5 years is a lot of money. So that alone would be a pay raise. Right. Without adjusting your paycheck. Oh, yeah. That alone would be a pay raise. $108 a month. Yeah. It's huge. It's huge. And so that's why credit is so important. It's the lifeblood. Is, you know, unless we're born millionaires or have that rich uncle, which unfortunately most of us probably don't. Right. It's a situation we're going to have to deal with the rest of our life.
Okay. Was there anything else you wanted to hit on?
Yeah, I wanted to talk just about the revolving credit as far as that, because revolving is such in our industry and with credit report, revolving is such a touchy, typically when I look at a credit report and I have credit issues, I look straight at the revolving accounts. You need to have credit cards. You need to have at least one credit card, I'll say that. But the big thing is they don't tell you is you do not need to go over 30% of the credit limit. So if you've got a $1,000 credit card and you need to keep it below 300. Okay. A lot of people are like, well, I pay my credit cards on time every month. But you owe $999 on the $1,000 limit credit card. So the credit report is looking at the fact that you are not in a financial shape enough to pay more than your minimum payment, which is mainly just interest, to get that credit card paid down. Mm-hmm. And so that's the huge thing. So I tell people to always maintain their balances at 30% or lower of their credit report, and use them. I mean, don't not use them. Don't pay them off and close them out. If you do plan on paying it off, pay it off. Keep it open for a couple months to report, and then close it out as well. That's a huge thing. The credit limit, the balances versus credit limit, is a huge effect on the score. And then the other thing is to say in the same situation is when if you're married and you have as a husband and wife, let her have her credit cards. You have the husband have his credit cards. You don't want to have too many joint applicant loans. Too many people go out there and she'll have 6 credit cards, he'll have 4 credit cards. Well, when you apply jointly on those accounts, and it goes for installment loans as well. When I pull your credit report, you have 10 credit cards. You have 3 cars. You have even though it may be her card, she pays for it, or her credit card and she pays for it, it's on your credit report.
Right.
So you've got way too much credit. So I'll let people know is to keep things individual. If it's his car, in his credit. If it's her car, her credit.
That's good.
It's a smart way to do it, to not overload both of your credit reports.
That's really good. Does it matter on your credit cards the amount of credit card that you have? If you have like a $300 credit card, gas card, I mean, does it matter that? Does it just still help as long as you have credit cards?
I'm glad you asked that question. Balances do not matter, and the reason is it doesn't matter if it's a $200 credit card or a $200,000 credit card. And it's the same way with any type of loan. And the reason that is the credit reporting companies have no idea what your income is. So they don't know if you make $2,000 a month or $200,000 a month. All that they are doing is they're saying this person went under contract with this entity, this lender, this creditor, to pay X amount of money against what they borrowed or what they charged on his credit card. And as long as that contract is made, as long as you make those timely payments, it's going to increase your credit scores.
Okay.
But if you miss that 15, and I've had that so many times that someone will have 7 accounts and they have one little bitty credit card that's only a $15 a month payment, and they let that one go late. It doesn't matter. It's just as much. It's just the fact that you did not pay it as agreed.
Now, what about paying rent? If you're renting, can you pay on time when you're renting? Is there any way that you can have that applied to your credit? Typically
not to your credit report, not in our area. There are some areas in larger cities that agencies, but it's actually an expense to the creditor to report to the credit bureau. Not everybody can report to the credit bureau, and you have to be a member of that credit bureau. So typically rental as far as helping your credit scores would not. And a lot of people get that. It goes farther, like even the cell phone bills. They think their cell phone bill reports to their utility bill. You know, it's strictly loans. It's strictly, you know, when you go buy something, you sign the paperwork as far as, you know, making X amount of payments over a period of time. And that's one thing to touch on too is make sure when you're going to get that loan, make sure they do report, because there are companies out there that only report to one bureau. There's 3 bureaus out there, and a lot of your smaller lenders report to just one, and some report to none. And so you may have 10 loans with this company over the last 10 years. And as far as your credit report, it's only either affected 1 score or no scores.
Okay, that makes sense. Yeah. So your power bill and all of that does not go on your credit?
Right, does not.
Okay. I had always heard, it's still good to be in a good habit of making that on time. That's some good information. Now, I wanted to ask you, I know you do a lot for the community, and if you can tell us a little bit about how you're involved in the community with some, I guess, what is the word for it? Charities?
Just outreach, kind of outreach programs, right. Yeah, I'm actually a member of Southern Legacy Outreach Group. We've just recently moved to our new location on South Royal Avenue, and we just do a lot of outreach groups. We do a lot of, quite a few of us ride motorcycles. We do benefit rides. We have food pantries. We have clothing pantry. We do a lot of construction that, if needed, as far as elderly home, elderly person that can't maintain their yard, can't maintain their house. We're working with a lady now that has a child that's handicapped to make her house and home more handicap accessible. So just a lot. I enjoy that tremendously. Realize how blessed that we really all are to have a car, to have a cell phone, to have a TV, because there's so many that we pass today, every day, in Florence, Alabama, in Muscle Shoals, in Tuscany, and Sheffield, that are going through so much right now. Homeless. Dealt with a lady that her and her 2 children were sleeping in the Walmart parking lot in December in their vehicle for 3 days. So it's a humbling, a humbling thing, and it does make me feel more blessed, as far as to have what I have.
Well, how could someone help, volunteer, or maybe give money to this to help? Because I know.
Well, we do have, as far as Southern Legacy Outreach. I mean, it makes there's no better blessing, there's no better feeling than to help someone else. So I mean, it goes as little as just seeing someone on the side of the road, pull over and help them if they need assistance. But as far as us specifically, we do have our Facebook page, Southern Legacy Outreach, and they can contact us through that. As far as we do have a food pantry as far as non-perishable foods. We're actually planning a big Thanksgiving. We fed, I think, a little over 80 families last year for Thanksgiving. This year we're going to try to hit over 100, and we're actually talking about doing an actual soup kitchen either the day before, the day after Thanksgiving to feed people that could actually come in that don't have families or don't have the means of getting Thanksgiving dinner.
Goodness. Not only do you get people in the home of their dreams, but it seems like you really care about them and you care about the community. I do. Like I said, it's great. I love this area. Born and raised, not going anywhere. I've got 3 kids. I love my family. I've been blessed with a great family, and just enjoy seeing people of all ages get homes. Making dreams come true, basically. Right. Because it is an investment to get a home.
It is.
I've had a really good time, and I hope that you'll come on once a month and maybe give us some more tips.
Would love to. Okay.
All right, great. And do you want to give them their contact to call you for?
Yes. You can contact us at Hancock Mortgage. It's 256-766-LOAN. That's 256-766-5626.
All right, and thank you for watching.